Right. Labor Day weekend here. Um, just want to make this video and show you guys how I'm marking up my charts. Um, I have started trading a few more setups. Still watching and trading the fib uh, retracements, but um, really starting to look at fair value gap trading. Uh, I've been doing really good on it uh, with a little bit of refinement to take away some of my losses. I think having both the fair value gaps and the fibs are going to be just a freaking moonshot for me. Um, so I just wanted to come in today and mark up my charts, let you guys see what I'm doing. Uh, and I got to set up a few templates anyway, so I figured I'd just go ahead and record the session. Uh, I'll probably do a couple of sets of charts and then just cut the video. But basically, I have four tabs that I'm watching now. The first one is ES and NQ. Obviously, I want these two together so that I can see SMT divergence. Uh, and I only trade the NQ. I mean, there might be times where I take trades on ES, uh, but for the most part, I just trade NQ. But I need these two charts together for the divergence trades. And then I'm putting the Dow and the Russell on these two charts. These two have been, I mean, as you can see, they've pretty much been working together. And as long as they move together like this, like the ES and NQ should, um, I could probably use these two charts for divergence as well. We're gonna have to watch and see. I mean, right now, you know, as you can see, we've got divergence on the 15-minute from Friday afternoon, where the Dow made higher highs and the Russell made lower highs. So we'll have to watch this and see what happens there. Um, I haven't watched these two together before, so I'm just going to have to watch and see if that divergence happens, when that divergence happens, if it uh, gives me a little bit better confluence on a trade. So then I have uh, gold and oil on one. Now, these two don't typically move together, so um, you know, it actually looks like they do um, a little bit, or have been anyway. Kind of, not really, not at all. Okay, they both just dumped in the afternoon, but for the most part, you know, it's it's not really the same. So, not looking for divergence on these. Those just be fair value gap trading on these two. Uh, and then on the last one I don't look at all that often, but still want to watch is uh, the euro dollar, the euro and the US dollar. These two should be moving in opposite directions. So you can get divergence from this. Um, you know, if the dollar is making a higher high, uh, the euro should be making a lower high or a lower low. Um, if that divergence happens, then we'll definitely higher high, higher low. I'm also watching a football game on another screen, so I just have the volume turned down. Um, so yeah, uh, these are the charts I'm going to be watching now. So Falcons went ahead by another 3 points. Yes, no. Um, and I pretty much have them set uh, the way I look at them. I mean, NQ is my number one. I do like the YM. I haven't traded Russell much, but I wanted to get it up and look at it. And then gold and oil are kind of my go-tos if nothing's happening in the indices. And then if I just can't see any trades there, I'll just look at the euro or the dollar and see what's going on there and see if there's something I can see. So let's get to marking them up. Uh, so we'll do the ES first. And the first thing I want to do is look at the weekly chart and get just a couple of weekly levels and see what's going on here. Um, so, man, we're about to hit all-time highs again. Um, all right. So on the weekly, what we have is an inverted fair value gap from over here. I have templates for pretty much all of these. It's not coming up. So made a bullish fair value gap, and you can see that we came back down and tapped into that for internal liquidity. So, uh, and we broke last week's high. So we are definitely moving to external liquidity, which is going to be all-time highs. Um, so definitely going to be watching that. That is a weekly swing level, so we'll just go ahead and stack that on there. Settings, the swing levels. Let's see this on the weekly and above. And making it all of time base, or my swing levels are all in neon green. So I need to resave that. And swing levels are also liquidity levels. I mean, I could just, you could call that buy side liquidity. I just like to know that it's a weekly swing um, because, oh, I did set up. I want to see that on the daily as well. Uh, So let's save that again. Okay. Um, so yeah, right now it looks like we're just headed for all-time highs. On the weekly, we are bullish. So let me lock that in, and then we can go to the daily. Let's see what we've got going on here. Where's our last fair value gap? We got this high here on the daily. That is the next daily swing level until we get up here at the all-time highs, uh, which is only 8 points away. A whole lot of consolidation going here. There's our manipulation move right there to now run higher. Not come back down to test this fair value gap yet. So on daily, this is our last fair value gap. We're going to go to here. I'm not going to put this on the hourly charts because where don't I? The daily and weekly are just to kind of show uh, which direction we're moving. So I'll leave it there. Style. Let me just do uh, like that. Sure, I don't want this to show up on the weekly, just the daily. That's all I want to see it on. Uh, so save as daily, daily goal. Everybody got. So that'll work. We'll lock that in. This one, uh, go to settings. Style is good. Text. This is a daily. Sweet. Do want to see this on lower time frames. Uh, all the way down. So save as daily swing. I also want to see the weekly swings on uh, the hours and the minutes as well. So we'll resave that. So, because these are time-based liquidity levels, I want to see them on all my charts because I'll definitely be looking to take trades in those areas, and I want to see how price reacts on the lower time frames when we get there. I'm not so concerned about you know, the larger fair value gaps. Those are just, if we take out this daily swing level, maybe then we come down and um, retest this fair value gap before going up to all-time highs. Maybe we just break through this one and go straight to all-time highs. We'll just have to see when we get there. We do have a little bit uh, obstruction in our way here is settings on this because I think, wait a minute, I might have, see if it has settings on that. No, 'cause so go to settings, style, text, visibility. It's just on the daily. So I'll save that as daily. Style is not correct because we get a red background here. So yep, just uh, let's resave that. Save. So we have tapped a couple of times. If we invert that, then absolutely headed for all-time highs. Sweet. So, so that's basically what we have on our chart. So that's what I'm looking at. Now I do this on multiple time frames, um, but and I'll show you where I start overlapping the time frames, higher time frame fair value gaps onto the lower time frame charts. But as of right now, on the daily, you know, these I want my swing levels, my buy side and sell side liquidities, which are based on time. I want those showing on all my charts. Don't want the fair value gaps. So the daily set. Um, Weekly and daily bias both show the same thing, that we are headed for all-time highs if we can get through this fair value gap. Um, how we do that is another story. You know, if we take liquidity here, just barely get through the fair value gap and then fall, we could be coming down from this liquidity or this fair value gap before going back up. Or we just invert that fair value gap and just blast into all-time highs. We do see our manipulation move. We had we had a nice range here. See right here. Broke below it once, and then we swept that low to go higher. So this is a good manipulation move to move price higher, and really like that. So there we go. I am not using any indicators on my charts anymore. Uh, I am drawing all of this out on my own because number one, I think drawing it out yourself definitely helps you to just keep everything in your mind. Now, I do keep a written notepad because obviously, once I go through all these charts, I might not remember what I thought about S&P. Okay. Um, so it's just a simple notepad. Um, to say S&P bullish, and that's all I really need to keep track of. And I may not even keep that anymore now that I'm doing all this drawing on my own and setting it on separate charts. Because all I have to do once I'm done is come back into my charts, open up S&P, click on my time frames, and just review what I see before the trading session, and then yeah, write it down so that I have a quick reference that I'm looking for longs on the S&P. So that's the daily. Next, I want to go down to 1 hour. Okay, something showed up here. What was this? The weekly inverted. Okay, so let me click on this, go to settings, visibility, weekly. I only want on the weekly. Now we can resave that. Weekly inverted. Okay. All right. So the only thing that should be showing up on my hourly chart are my weekly and my daily swing levels. Okay. Um, and then we'll go in and we'll pretty much do the same here. Um, where's our next fair value gap? And what I'm looking for here when I'm looking for fair value gaps is I would preferably like to find one at a swing level. Um, that doesn't always happen. Okay. Um, like here, we just don't have any fair value gaps at this swing level. No fair value gaps just above this swing level. Really, our only next fair value gap is up here. Um, so we will mark that out. Set up a daily template. Style. This is a bear. Visibility. This is the hourly chart. I want this out in the hours and the minutes, but I only want it down to the 15-minute chart. Actually, I should say I only want it from the 15-minute chart and above. Okay. Show you that here shortly. Why? All right. So this is a 1 hour fair value gap. Save names. Some 1 hour swing levels from current price. Okay. That's fair value gap. So come back and do it again. Let's just go ahead and mark this one as well. That way, if we get through the first one, I don't have to come back and search for this one because it's so far back. Data settings, template, save as one. There, sure. Save templates, and I'm going to delete that one. It's that one. Because all of these need to be time-based dailies. Oh, I don't want it. Inverse, I don't want it. OB, I don't want it. Leave range just because it helps to put that on the chart when I see a ranging market, you see when it leaves the range. Um, okay, so we have that. All right, so this is template, 1 hour bear. This is bear, plug that in. And after that, it's clear sailing up to all-time highs and this levels. All right, so now what I want, that daily swing is much in play as that swing. Uh, we have this one here, which has already been broken. After that, let's see, we're swing up here, this one here. This is a 1 hour swing. So we'll go to settings. I want to see this on all time frames. Style, text, 1 hour swing. Oops. Save as 1 hour swing. Save. And then we need to go in here and delete all of the buy sides and sell sides. I just want to call them swings. Uh, Then, because we're going to be using that, but we're going to have to change it. So it needs to be a different color. And the swings. And I'll show you that when we get to the charts, to the 15-minute chart. All right, so we have our bearish below. Back to current price. Fair value gap held. So go to that. Fence. We get down there. Settings. Style. Green. Text. Oh, yeah. See this. We don't care about the weeklies. Need it on the hourly and minutes. But we want to see this all the way down to the 1 minute chart. Save as. Chart of 10 and 15 minute. I did 15 minutes for the bears. Let's do 15 minutes, yeah. See, see, saved. Switch that over, lock that in, lock this one in. Sell side, we have this one here. Daily also hits the 1 hour, so we're good there. Uh, 1 hour swing, that in. So there's our 1 hour chart. And we're going to come down to the 15. Now, I will pay attention to 15-minute fair value gaps, uh, but really what I'm looking for, um, I'll pay attention to them as far as entries uh, and such, but I'm not going to mark out a lot here because what I am looking for is what price does when it reaches a minimum of a 1 hour level. Okay. So when the 15-minute chart gets to a 1 hour level, then um, I drop down to either the five or the one and take my trade on that time frame. As soon as I am in that trade, I'll come back to the 15-minute chart and I'll look at where price should be going. Okay, so let's just say um, we sweep this liquidity and we get a good reversal, okay, signal. Then, you know, that's external liquidity on an up move, looking for it to come back into internal liquidity, which, my first guess would be this fair value gap right here probably would be the stopping point because we have an inverted 15-minute here uh, where this bullish fair value gap was made. So I don't see price coming back below that. So if I get a reversal signal up here, this swing level, um, I'm probably, I may not take the trade, you know, uh, depending on what kind of risk reward I get, uh, 54. Okay, well, if we came up in here and got a reversal signal, that's 20 points back down to this fair value gap. Uh, that work. What I'd really like to see is price move up from here and give me a 1 hour or 15-minute swing level right here that would be right on top of the fair value gap. That just gives me a little bit more confluence in looking at the trade, but that's pretty much it. I'm looking for price to move into 1 hour levels. When that happens, I want to take a look at the 15-minute, see what I've got, um, and see, uh, do I have room for a trade? So on ES, what would I be looking for on Tuesday? Because I'm not going to be trading on Monday. Um, well, we started our weekly, and we said our weekly was what? Bullish, right? We just inverted, and made a bull fair value gap, then we came down, retested, and now it looks like we're headed for all-time highs. Unless we get a little bit of a reversal right before it and come down to a smaller time frame level internal liquidity before pushing up. But looks like we're headed up, most definitely on the weekly chart. So I'm looking for these two, this daily swing and this weekly swing and the fair value gaps in between to see what price does when it gets there. But according to the weekly, I want to be looking for longs. The daily, same thing. Definitely want to be looking for longs here. Um, we inverted this fair value gap over here, which I need to mark on the daily. I didn't see that a minute ago. That would be this fair value gap here is a daily inverted, and I don't have one, so let's go to settings. I don't want to see it on the minute. I'll leave it on the hours for now, I think. No, we're just going to put it on the daily. Style, this is going to be an inverted. And text is daily invert. Save as. Then invert. So we inverted this fair value gap. We've come down in our manipulation move into that liquidity, and now we're moving up. So we're bullish on the daily. The 1 hour, does the 1 hour look like? Yep, it's pretty darn bullish. Uh, had, had a couple of pull downs here, but we're back in range and heading back up. Still bullish. So what I'm looking for on the 15-minute is a bullish opportunity to trade. Is that going to come up here? Probably not. Um, unless we're just going to be blasting through all this, making fair value gap when we go through these swing levels, fair value gap when we go make it through these, uh, when we invert these fair value gaps. I mean, do we create a bullish fair value gap when we get through those, which means we're moving through them with a lot of force? Um, then maybe I find a pullback in there to grab. But what I'm looking for a bullish trade is some kind of retracement. This is pretty good displacement that broke a broke a swing high. Okay. Um, so this could retrace to the 6-2. This is where my fibs come in, right? So on the 15-minute chart, if this continues to pull back, I could be looking for a trade. Let's get rid of the 5.0. I could be looking for a trade if we get back down into here, okay, to go long. Because I'm only looking for longs. Those are going to be my biggest risk reward trades because the weekly, the daily, the hourly are all in alignment long. So I want my 15-minute and my 5 or 1 minute, whichever I decide to trade on. I want those to be long trades. Okay. This right here would have been absolutely perfect entry. Oh man, look at that. This is turtle soup. Okay. We came down and we swept this low right here, and then we immediately got an engulfing candle right after it. We could have entered right there on that candle when it closed on Friday. Kidding me? We could have entered there, actually put our stop at the bottom of that candle and traded up to this swing high, 3.28 to 1. We would have gotten there. Uh, two contracts. Don't think I wanted to risk 1450. I'm willing to risk $1,000 on a trade. So one contract would have been good. Would have been a 23, almost $2,400 trade, and we would have got there at 3:45 in the afternoon. That would have been fantastic. I didn't see it. Wasn't looking at ES. Like I said, I just don't trade that much ES. But that is a perfect turtle soup entry. So nice to see it working. Um, I would definitely take, you know, a long trade from the 6-2. You know, and here's the thing about these trades, and you have to kind of realize what's going on because if we were to reverse here and come down to the 6-2, well, what have we done? We've inverted two fair value gaps. Okay. Um, and most people would say, well, but once we invert those, we're not going to go back above them. Well, yeah, we are. Why? Because this is the smaller time frame. The hourly, the daily, and the weekly, bigger time frames, which have more control over the market, um, are all saying we're going higher. Okay. So, you know, the hourly, maybe not so much because we're in a range here. This could be the top of a market maker model, right? We've had uh, plenty of push up, the original consolidation, two two consolidations before we got to this. We could be at the top of the market maker model. Maybe we don't go to all-time highs. Maybe we take liquidity here at this daily swing. We start moving down. I would say doubtful because we've had one push down, two push downs, and we've had a lot of attempts to push through this daily that haven't gotten there. Eventually, this level has to break, right? Um, even if it is to get up into the fair value gaps, not make all-time highs, but get up into this area to grab more liquidity to come down. Eventually, this level has to break. It can't hold forever, right? We've had one, two, three, four. This is the fifth push up into it. Uh, so we'll have to see. But because we have had a pretty decent market maker model for sell side to buy side, we always have to be wary when we come into this much uh, overhead liquidity that we could just grab some of that liquidity and start a sell side and come back down somewhere. So definitely have to be watching here. Um, but the weekly definitely says we're going higher, uh, just for the simple fact of what we've done. I mean, we did take last week's liquidity, right? We swept last week's high. Um, and after we did that, at the beginning of this week, we went down, but now we've recovered and we've ended up bullish uh, above the body of last week. So I'm still looking at going higher and getting to this daily swing up here at least before having any problems and maybe coming back down. So that's why, like on the 15-minute chart, if I'm taking trades and I come down to the 6-2, I fully expect it, even with inverted fair value gaps. Now, there's going to be some resistance there, and I have to be prepared for price to pull back some when it gets to these levels and be aware of my sizing so that I'm not, oversized and getting a big pullback that puts me in a big drawdown, right? So I have to be aware of that, but I would still expect price to go back up and get through those inverted fair value gaps because the higher time frames are in control. All right. So that's that. So that is pretty much the way I mark up my charts, everybody. Um, when I'm on the 15-minute chart, I know that every fair value gap is a 1 hour. Uh, my swing levels are labeled so that I know what they are. Um, and then I will also put time-based liquidity. Okay. They're not on here because Friday's over. Um, and the next time-based liquidity for me doesn't start until Monday at 6 p.m. So if I were to go back to this Monday, okay, what I want to find is Monday at 6 p.m. This candle right in here, okay, 2100, 6 p.m. All right, let's grab a ray, and that is the 6 p.m. candle right there. A push right there, right? Yep. So the opening price of that is right here. And I'm going to put a ray there. Now these rays, my time-based liquidity rays are going to be orange. Okay. So I know my swing rays and my time-based liquidity rays, right? So that is the weekly opening price for last week. And what did we do? Well, you can tell that pretty much all last week, Friday, this day. Oh, okay, wait a minute. Well, week before last, what did we do? We just ranged. We were below it, above it, below it, above it, below it, above it, below it, above it. It's just a ranging market that week. Now, if we go to the next Monday and we put in a rate at 6 o'clock p.m., there, it's this candle right here that opens right there. Pretty much opened the same place as the last week. Why? Because the last week was a ranging market. So we started off ranging, and then we got our push. Okay. Got our push away. Now we have some displacement. Now we're either going to continue or we're going to reverse one or the other. Um, and we reversed and we displaced above, broke highs, came back down to grab liquidity, came back up, and the fair value gap, hit some resistance, went down, came back up, and took that liquidity, took the liquidity from this low, made a new high. Okay. So we could range, still be ranging, but we are expanding that range at least. Okay. Um, so the Monday open, or the weekly open, which is Monday at 6 p.m., that's the true weekly open. Okay. Um, and since I won't be trading on Monday, I will wait till the market opens Monday night to set the new uh, weekly opening price. Okay. These get removed. I don't care about previous weeks. All I want is the current week. And we have been ranging through the last 2 weeks on the 15-minute chart. Big range, but it's still a range, right? Um, until we made our manipulation move to sweep the low and then go higher. Uh, we were just ranging here. So I do expect um, come Tuesday for us to start our uh, our displacement moves. Accumulation, distribution, continuation, or reversal. Power of three. It's how the market moves. So we have accumulated for the last 2 weeks. I do expect distribution to start next week. In which direction that's going to be, we'll just have to wait and see. All signs at the moment say we're going up. So I'm going to finish marking up the rest of my charts throughout the weekend. But go through, you know, if anybody wants to give this a try, I've had great success. Um, you know, get a set of charts, mark them up the way I mark them up. Next week, if I don't do live trading, at the very least, I will record my trading, and then I will edit out all the dead spots, um, and at least be able to show the actual trades I take and talk through them, why I took them, um, how I manage them, what kind of size I'm taking. Um, I am doing multiple contracts on trades and I am trading minis. Uh, I try to get at least 5 contracts into a trade. I usually start with 1 or 2, depending on my confidence level, um, and the type of entry setup that I'm taking. Turtle soup, those entries, which is right here. Turtle soup has, a lower win rate, but it gives you the best risk reward of any entry. So I would probably start that trade with, 1 contract. And then once I see that the fair value gap held and we got above the high, I would start adding contracts along the way. And by this pullback right here, I would want to be in 5 contracts minimum, for the rest of the move. This is how I've been making these really large trades. Okay. Um, this is how I've had, well, one day was 10,000, another day was 9,000, even though TradeZilla shows 11,000 because it was showing the Asian session trades in there as well. I mean, if you go from Asia session to the end of New York, yes, I've had 2 5-figure days. Okay. Um, and this is how I'm getting it done. I'm not afraid to trade size. Now, if you're trading a smaller account, obviously do micros, but you got to add to your trades. And when they're working in your favor, you have got to add to your trades. I mean, this is a 15-minute chart. You're in this trade literally from 12:45 to 3:45, and that's a 3-hour trade. Uh, if we go down to a lower time frame, you know, I probably, if I entered here, I'd probably be taking most of my trade off here. I would have left a runner because I always want to leave a runner, um, because we displaced through that trade, that level. I probably would have taken most majority of my profits off on one of these 2 candles, left a runner, and caught the last bit of it up here at 3:45 in the afternoon, which was this buy side liquidity. Okay. Um, but this is how, you could be in this trade for 3 hours. Now, have I had a 3-hour trade lately? No. I wish I had seen this on Friday. I probably would have traded the ES here. I'm sure NASDAQ probably looks very, very similar on the 15-minute chart. Uh, yeah, no, this was the divergence. Okay. Still had a turtle soup trade, but, well, yeah. See, ES swept this low from all the way back here, or NQ only swept this low. So from the same lows, we had a lower low on ES and we had a higher low on NQ. Perfect SMT divergence to start the afternoon and one hell of a run up. I did not see this, guys and gals. I wish I did. I mean, that alone could have been, I already had a $4,000 day. This alone could have been, a $10,000 trade. Um, so yeah, I, damn, damn, I missed the shit out of that one, didn't I? So yeah, I mean, these are the things you got to look for. That's perfect SMT divergence, a sweep of lows. Uh, you know, that's just beautiful. All right. This 1 hour fair value gap. I mean, yeah, uh, it held. I mean, it closed eh, right there. Um, I'm almost willing to delete that one, but we'll leave it on for now, just to see. So, but yeah, I mean, hindsight is a wonderful thing to have. You see what you missed. Uh, Again, I wasn't looking for a big trade on Friday. I almost just didn't trade at all on Friday because I already had like 42, almost $43,000 uh, for the month in profit. But I saw a few opportunities on the shorter time frames. I took them, and I ended up making close to $5,000 on Friday, and at that point I was just pretty much done. I had a good day. It was Friday. I didn't lose money, um, so I just called it a day. Man, do I wish I had seen this. And I mean, that just gave everything. Sweeping lows, SMT divergence, turtle soup entry, and just bang. I mean, would have came into some drawdown. If you took the turtle soup, you would have come into some drawdown. If you had waited for the retest of that fair value gap, probably would have entered here. Had a little bit smaller drawdown, but either way, you would have been in the negative for a little bit, 30 minutes or so. Um, an hour if you take a turtle soup because you started your drawdown here, came out of it, went back into it, and then came out of it. Um, yeah, I mean, I what time is that? I gotta see this. 12:30. Let's just go down to the 1 minute chart. I want to see 12:30. Oh my goodness. Goodness. Swept those lows. We came down, made a low, swept it again. So there's your fake out. Down and back up. A lot of people probably would have gotten long on that candle there, got stopped out. Wait for this candle to sweep again. And then, oh my goodness, look at this. Your entries right here. I mean, okay, so here's a good way to manage this trade. Okay. Um, our 1 minute entry is right here. And if we took that trade right there, okay, and turtle soup, we're risking the low. So right around in there, somewhere. Um, and as soon as we're in that trade, if we switch to the 5 minute, okay, where did the trade go? There it is. If we switch to the 5 minute, here's what we can see. Hmm. We take this trade. We get a huge push out. Now, this is what, a lot of people would trade to this high right here and take the 4.6 to 1. Okay. And I'm not going to blame them one bit. On one contract, that's $1,800. Okay. But with me, if I'm looking at the 15-minute chart, I'm not, and I see the turtles, I get this entry here on the sweep of this low, okay, and I'm entering on this 15-minute candle here, okay, because I get a turtle soup. That's not the entry. All right, the entry's right there. Okay, risking the lot. All right, so that's a 3-to-1 trade, just trading up to the previous high. Okay, no, it's not. All right, 2.6. Let's just say you went to this high. Okay, now you're getting 3-to-1. That's a damn good trade. Not gonna hurt anybody. But on the 15-minute chart, when I get my entry down here, and then the 15-minute confirms the turtle suit on a 15-minute chart, well, wait a minute, let's switch this over next. Okay. So, okay. So we get a confirmation of the 15-minute turtle suit right here. Okay. What am I looking at? Well, I'm looking at going up to this previous high on the 15-minute chart, which is way higher than these levels down here. It's up here. Okay. So I'm willing to hold through this pullback. And what happens when I get that pullback? Well, I probably would have added to the trade right here. Okay, because we came down and this fair value gap held, right? And a lot of people would get nervous right here because we just inverted this bullish fair value gap. But what I'm seeing is just a fake out. This was the fake out. Uh, some people, after this push up, would get in on this pullback except for a long. I know where their stop would be. I just be below that candle. If it is, they get stopped out because you get a sweep, you get displacement, you get the pullback, you start to move up, but you don't break the high. Wait for that second sweep of a low. You get it, and we start pushing up. Okay. So I may have added here. I'm not getting out of the trade. I'm not getting out of the trade here either because where's my target? My target's all the way up here. And when we get there, easy. That's a 6-to-1 trade. So probably add it here. Then I go into, you know, would I be in a drawdown? Our original entry was here. Our add was here. 50% of that would be right around here. We get pretty close to break even before we reverse again. But guess what? As soon as we break this high right here, and that forms a fair value gap, this is a structural fair value gap. Okay. We make a bullish fair value gap as we sweep a high. Okay. Um, so I'm probably adding again there, which again brings my average price probably up to about here. But by here, I'm in at least 5 trades or 5 contracts. I never get back down to that to break even. And I get 5 contracts from here all the way up to here. So let's just see what that looks like. This was one contract. Okay. Start the trade with one contract on a turtle soup, right? That trade made 37.95. Okay. Let's just put it up here so we don't forget. 37.95, we'll just say 3,800. Okay. Depending on where your fill was. We added here. Okay. Now, if we add one contract right there, from here, of course, we're not risking below this low anymore. Probably risk that fair value gap. Okay. We entered here pretty close to the bottom of this fair value gap. I'm going to risk below the next fair value gap. Okay. And that trade goes to profit. About as even as I can. Right. And this is one contract. That trade makes 28.40. Say 2,800. Then when we break this high, now I'm going to add three contracts. That's going to bring my average price up pretty good. But I still, even on this pullback, would not get, because that would put us right about here on two contracts, and then three contracts would probably bring me up somewhere in this area, okay, for average price. I still don't get back to break even on this pullback, okay? But those three contracts from the break of this level, which would be the close of this candle where we made the fair value gap, okay? And this one I'll probably bring up as a stop right around here. And I'm moving this stop up as well. Once I enter here, I move this stop up somewhere right around that low. I usually try to pull it up a little bit higher, uh, halfway through that fair value gap, maybe, but at least move it up to here, okay? Because I'm increasing my risk with more size. I need to pull this stop loss up, okay? So this is going to be three contracts. And that trade makes $5,500. So 55.85, that's 10,000, 11,003, $12,100. Like I said, that would have been a $10,000 trade. Okay. Absolutely nuts. Absolutely nuts. And I didn't even take it all the way up. Just came to this, the high of this consolidation right here, and got out of the trades. Now, once I'm in here and we get this push up, I might take a little off here. So instead of 12,000, maybe this turns into a nine or $10,000 trade because I take a few contracts off just to lock in that profit. I've got my third ad. As soon as we get a good push up, I usually take a few contracts off to lock in that profit. We come down and get our final push up. That's just that's I mean that's just an amazing trade. And that's on the 5 minute chart. Okay. I mean, absolutely, absolutely amazing. I'm just looking at something here. Push up there, break that. Come up. Shove it there, like that there, so we trail to there, that would be perfect. Then we push up again, bring the trail there, but we're out of the trade. 355, we're out of the trade. And if I was trailing my stop up through here on price weighted trailing, uh, I literally would have taken this whole trade and been out of the trade. That's that's 355. Close that trade as close to 4 o'clock as possible. Should be out. Actually, I'd be out a little bit sooner than that because it closed right at 4 o'clock. So I'd be out of the trade a few minutes before 4 o'clock and would have been up in here somewhere, which would have been even stupider money. Stupid money. Okay. So that's what I'm looking. That's what I'm looking at and how I'm looking to trade. Do I get these perfect trades? I mean, would I have traded this exactly like this? Maybe not. You know, but as you can see from my results, I am doing pretty darn good. Um, I need to work on my trade management, where to add. Sometimes I'm adding a little too soon. Sometimes I'm taking my profits off a little too soon. But I sure as hell ain't complaining when I made $48,000 in 3 weeks. Right? Um, and this is just basically fair value gap trading. Now, you can see, you can look at the 15-minute chart, and you can tell this would have been a good fib trade. Okay, because if you drew your fib from swing low to swing high, you entered at the 6-2. That's a lot of drawdown on a 15-minute chart, but it worked. It never broke the low, which S&P did. If you'd taken that trade on S&P, it would have stopped you out, but it never took the low and went back up. Now it did make the 2.7, but it did get back up to the previous high. Okay, that's where you would have taken majority of if you were trading the fib itself. Now, granted, we didn't have enough time because the market was closing, right? But if we'd had enough time, I would have been looking for the 2.7, but I would have locked in my profits, some of my profits here at the previous high, and then left a runner to get up to the 2.7. Right? Now, if we broke through strongly after I took profits with price, if we displaced up through here with a fair value gap and broke this high with a fair value gap, probably would have waited for a pullback into that fair value gap and added to the trade for the push up to the 2.7. But that's how you work the fib trade. Now, again, that's a lot of drawdown if you're doing that. On a 15-minute chart, I probably wouldn't take entries until I got at least to the 7.0. Uh, on the 1-minute chart, um, I'm okay if I'm doing fibs on a 1 minute. They're a lot tighter stops. But this, I mean, even if you took a trade at the 7.0 and you risk the low, I mean, that's an 89-point stop in the NASDAQ. Even with one contract, I mean, that's a pretty good risk. Actually a little more risk than I care for. Yeah, 1790. Not only I wouldn't really want to take a trade at the 7.9 because once it gets down that far, now I'm a little worried that it might actually break the low and take liquidity from the low. Uh, This is why I just don't really trade 15-minute chart. Either that or I'm going to have a couple of stop outs until I see the turn of soup, and then I can take the trade. So again, this is probably why I've been doing better trading fair value gaps than I have my fibs, because the fibs have been pushing, you know, even through the 7.9 before reversing, not stopping at the 6.2 or the 7.0 and then reversing. They've been pushing a little further. We've had some good volatility, and that's caused me to stop out a couple of times on my fib trades before I actually get into the trade after it actually reverses, uh, and then make my profits. But I'm having to make up for, you know, a few stop outs that happened before that. So waiting for, you know, levels, uh, looking for fair value gap entries, definitely watching for SMT between uh, the ES. Let me remove this. I go back to the ES chart. You know, definitely watching for these things. Structural sweeps, fair value gaps through structure, 1 hour levels, levels and fair value gaps, time-based liquidity and fair value gaps. I really think is all you need to trade with. Now, I still use the fib. I mean, I want to see, where's the 6.2? Well, this fair value gap would, which really isn't a fair value gap. The last fair value gap is kind of right here, closer to the 7.0. So maybe I wait till price gets down into that fair value gap before taking my entry, right? If it pulls back that far. We got this fair value gap here, then it could reverse out. So, and this is where, I've missed a lot of good trades as well, that I've noticed, where my fib level's up, but it never gets down here because we have a fair value gap that holds before it gets here, and then it reverses up there. So I'm just kind of watching uh, what's going on around this area as well. This, I would be watching the 1 minute chart in this fair value gap and see if I get a market maker model that gives me a reversal signal. Okay. And if it does, then I would take my long from here instead of down here. All right. Well, I know this has been a really long video, um, a little over an hour. So if you guys made it all the way through that, congratulations. You're probably a little bit more interested in what I'm doing than you might think you are. Um, but again, I am going to, uh, at the very least, start recording my trading. Uh, number one, because it's the easier way to review my own trades, um, and be able to write them down in a journal, uh, in TradeZello, you know, because I'll be talking through my trades as it's recording, and I can always go back and see what I'm feeling, what I'm thinking, and put that down in writing in a real journal, which will make things a lot easier. Number two, I can edit down the video to just the trades, um, and post that up so everyone can see exactly what I'm doing to be making as much money as I am. my goal next week, knowing that, like I said, we've been in consolidation for a while. I'm looking for that distribution move this coming week. I really want to focus on not taking as many stop outs before I get my trades. I'm only at like a 41% win rate. So I'm only right 41% of the time. I'm wrong more than I'm right, but I make good money on my winners to more than compensate for the losers. But just imagine what this week could have been if I could have cut out maybe 25 to 50% of my losing trades. I just not taking them. Would have been stupid, stupid money, stupid money. But so that's my goal this coming week is to be a little bit more patient. Uh, you know, hold my trades as long as I can, get my ads in, but most of all, uh, try to try to stop taking those stop out trades before the actual trade happens. So anyway, that is that. I'm gonna call it a video um, and get back to my football game, and then I'm going to bed. So I'll do more charts. You know, maybe markup. Just do a video of the actual markup. Don't explain trades or anything like that. And post up those markups on individual charts uh, so that everybody can see the levels I'm looking at on those assets in case you want to watch it next week. But until then, take care, everybody. Enjoy your Labor Day weekend. If you are traveling, please be safe. There's going to be a lot of idiots out on the road. And I will see everybody later.